Hey, what's up guys? Welcome back to the channel. So in today's video, we're going to cover my entire process or my entire thinking and analytical framework on how I was able to make 200 plus returns in a stock by the name of TDPS system in this volatile and uncertain market. So the main purpose of making this video is to show my process that you can use as well in analyzing capital goods company or any company in general by following the simple thumb rules. So I've realized over time that my expertise or my niche is in capital goods company, and I can analyze and make a lot of money with these type of companies, capital good companies. So that's what I want to share with you. What are the key metrics that you track in these companies, how you assess the future outlook of these companies, how you value these companies, and all of that. So towards the end of the video, we'll also look at the future outlook of the company. What is the company looking like from a FY27 and FY28 kind of view, and what should you do if you're looking to invest or if you're currently invested in this company. So on that note, let's start the video. So first, let's understand the business model of the company. So business model is very simple. It's a B2B capital goods player, right? It supplies your AC motors, generators, to your turbine makers, to engine players who use TDPS के products in offering their more diversified products, right? So let's say you have to build a gas power plant. अगर आपको gas power plant बनाना है, so you'll take basically TDPS का generator that is making and you'll put it into your entire steam turbine and you'll send that as a product to the final customer. So let's say power grid, right? You want to build a gas power plant. So you'll hire first Siemens Energy. Siemens Energy will tell TDPS, see, I need a generator for my steam turbine at these specifications. So this is what will happen. This is basically the business model of the company. It's not something that is very unique or something that is different that the company is doing. It's a very basic model. There are competitors. There's nothing unique or mortal about the business model. The only reason the company is doing well is because it's growing at a very high growth. That is the main reason. Around Q3 and Q4 of FY25 started tracking this company, and the way it attracted me or caught my eye was, if you see, historically company used to be growing in the mid-teens or 20% say, but in Q3 of Q4 of FY25 the company grew by almost 44%. So that was a bit something that caught my eye. I was like, oh damn, this company is growing by 44%. So first, deep dive into the company, analyze the company. It was not a big deal. So from that, what I could analyze, and during this time as well, I was tracking the data center capex in US very deeply, because I realized that जो भी capex हो रहा है और whatever is happening in US, India में अभी बहुत basic level पे है. Not a lot of groundwork has been doing, but US में the actual capacity expansions, the capital expenditure by hyperscalers was happening. And during that time, I read an article which said how your data centers are shifting to captive power plants, right? So now assume you are Google, right? You want to build a very big data center. And the thing with data centers is, I've mentioned in my data center video as well, you need 24/7 power supply to these data centers. So the thing with renewable energy like solar and wind is that they are not available around the clock, right? Solar is available only during sunny hours. Wind में there's the energy, there's the problem of high or low wind वगैरह. There's a lot of complications to this. So renewable energy is not a very self-sufficient source of providing energy around the clock. Whereas if you look at gas power plants can be run 24/7. That's where I realized that all of these hyperscalers, what they're doing is they're building captive power plants, captive gas power plants, basically on a very small scale for the data centers. The main capacity, the main purpose is to power these data centers 24/7, and you can't rely on grid because the grid is very not very stabilized, right? Power shortages वगैरह की वजह से that can cost a lot of business to these companies. So this was one of my most key triggers for the company going forward, because if I just show you the kind of growth that these hyperscalers were doing, these were doing almost $477 billion in capex, and now 2025-2027 they are going to do 1.15 trillion, a lot of money, right? So I realized that if these companies are doing capital expenditure, Siemens will benefit, and who will benefit? TD Power. So TD Power is basically like a proxy to the proxy of data centers capex. Now we'll understand how basically it evolved, right? And the thing with capital goods is, you always have to look at the forward outlook, right? And how do you look at the forward outlook or the आगे की growth is by looking at the order book. The order book and the order inflows, these are the single two most important metrics analyzing any capital goods company. There's capacity expansion as well, but we'll move on to that later. So first, order book and order inflows. Why? Because order book is basically what the company will do in the future. Different companies have different order book execution timelines, so you have to be company specific to that, right? A company like, let's say, Case International or Skipper, they have execution in like 18 to 24 months. So order book execute karne mein you need approximately 1.5 to 2 years. Whereas in case of TD Powers, the execution timeline is very small. Like if I have an order book, एक साल के अंदर my order will get executed. Sometimes it gets executed in 6 months or 5 months as well. So you can't look at the unexecuted order book. Why? Because it is usually small. Like let's say if I receive a 1000 crore order, that order will most likely get executed in the year itself. So looking at the unexecuted order book doesn't make a lot of sense. What makes a lot of sense is looking at the order inflows. The order inflow that is done on a quarterly basis. हर क्वार्टर में कंपनी को कितने करोड़ का ऑर्डर आ रहा है, कितने करोड़ का धंधा आ रहा है, वो हमको देखना है. Why? Because वही हमको दिखाएगा कि आगे जाके in the next few quarters is the company going to sustain that performance. Whereas in a case of Skipper or Transrail, why you look at the unexecuted order book? Because it is very large or the execution timeline is very long. So you can't look at the order inflows. You can look at it, but the main importance is given to unexecuted order backlog rather than inflows. Whereas in TDPS, more importance is given to inflows rather than order book. I started tracking this company in around like Q4 when the company had given around 20% growth guidance, which was not very exciting, but I could see that there are some triggers in this. Now I'll take you to the thing. Right. So in Q3 of FY25, you see the company had an order inflow of approximately 52%. Right. The company was guiding to grow at 20%, but company का धंधा जो future outlook है, that is growing at 50%. So you can imagine that this 52% की जो order inflow है, that will get translated into revenue sooner or later. In this case, it will get translated sooner. And even if you look at it, 71% of its orders were from exports. So I was like, oh damn, my conviction that this is a proxy to the data center and AI Capex that has been doing in the US, that is right. Then I look at the highlights and I found that company is also supplying to transformers, which is again a sector that I'm really bullish on. And the company also mentioned that it had ordered from one of the largest data center companies in the world. So my conviction that, or my thesis that this can be a proxy was slowly becoming true. Because if the company that is historically grown at let's say 15-20%, company को अगर अचानक से order inflows आ रहे 52% का, then it's pretty sure that in the near term company can grow at a supernormal profit growth, right? That's what's happening. And even if you look at the business outlook, company had given an outlook of approximately 12.75, that is 1 to 75 crores, which is not that much, 20%. But the thing is, the initial top line for FY26 was 15 billion. I was like, damn, this is sort of good. But I was seeing like, if the company ka order book is increasing at let's say 50, north of 35-40%, I don't see why the company would not grow its sales by north of 30%. Right? It's a very basic. अगर order book आपके 30% से grow कर रही है, then order inflows, you'll basically grow by 30% in terms of top line in the near term. So this is the kind of mismatch that was happening. And another mismatch that was happening was the demand supply, right? There was a tremendous demand supply. As we look at the con call management commentary, there was tremendous demand for these generators and motors, but there was not a lot of supply in the market. Because the thing is, these products need to be verified, tested, because these go directly into the captive power plants. So it's not like मेरे को सस्ते मिल रहा है तो मैं सस्ते माल ले लेता हूँ, नहीं. I have to be that is certified, ये trusted बंदा है, then and then only then I will use it in my products. So the key driver, as I mentioned, was exports. This was all in Q4 of FY25 when I started adding, I think around 400 levels pay. And then if you look at the con call, the management clearly stated that initial guidance 1500 crores की दी है, but it has a strong upward potential given the sustained order inflow and the third plant commissioning. Exactly what I said, right? अगर order inflows इतने तगड़े आ रहे तुम्हें, then company will grow at a faster pace in the near future. But the only thing during this was the capacity constraints or the management. The management is a bit conservative, like it under promises and over delivers. That's basically how the management works. And even if you look at the con call, the company is seeing double-digit growth in the domestic market and extremely strong growth. And basically what the company is telling here is that data centers, AI farms वगैरह, this is the next leg of growth. इधर से हमको बहुत अच्छा growth आने वाला है for FY27, FY26, 27, 28. This is what the management is telling us. That is why it is very imperative that you attend con calls, you look at the con call transcripts, because if you look at the results, you'd be like, 20% growth engine, not that much. But if you look at the order book, you would analyze the con call transcripts, then you would have been like, oh, this is a play that can grow really well in the near term. So all of this, like, these were basically my confluences to my investment thesis. And then if you look at the Q4, again 43% year-on-year order book inflow. That is why we're looking at the order book inflow, because if you look the order book, that is almost constant around 1300, 1500, 1600 crores. But the main thing is that the order inflow, that is consistently growing north of 35-40%. Like even if you look at this, the company has an order book, and around this quarter, around Q1, I was expecting that agar itna acha tumhara order inflow aa raha hai, like let's say 4,300 crores. So if you multiply 4 by like around, we get around 1,800 crores of revenue. Like if you multiply 4,000 by 4, you get approximately 16,000 or almost 1,600 crores. So I was expecting that management will increase its 1,500 to around 1,600 or even more. But the thing is, in Q2 of the financial year, like this is the portfolio of the business I showed you before. In Q1 as well, the company showed approximately 32% revenue growth. Now, 32% is good, but it's slightly down, and the main reason was tariffs. And I wanted to look at it this way, like even though tariffs were approximately 50%, order inflow still grew at 30%, not of 30%. Like the big players like GE or Siemens, these are saying that even there are tariffs, I still want orders from you. This is the kind of competitive pricing it has. So this just goes to shows, even though there was tariffs and most exporter companies like you see Avanti Feeds or Garware High-Tech, all of those showed negative growth, but this company that still showed 32% plus order inflows. So this was a big positive for me as well. And even during this time, I saw that most of these growths are coming from gas turbine, gas generators. So this is another confluence. And then in Q2, once I think during this time tariffs were sort of settled, the company showed order inflow 45%. So back to its original growth rate of 45% plus, right? So you can just see that as the pace of order inflow picks up, the pace of business growth also picks up. Even if you look at the income statement, look at the sales growth that the company is doing. Company used to do what, around 20% growth, but once the order inflow की growth rate, मतलब order inflow जितने pace से आ रहे हैं उसकी pace जैसे पिकअप की है, अब देखो sales growth कैसे बढ़ते जा रही है, 44%, 30%, 36%, 46%, always not of 30%, right? This is the kind of growth that the company was doing, and this is simple analysis that you can do. You look at a company, if you see that company ki order book is increasing by 30-40%, its order inflow is increasing by 30-40%, then company has to grow at north of 30% in the near term. In near term, depending on the order book execution. But you see that order book है तो execute होगी, revenue में दिखेगा, company grow करेगी. As simple as that. No need to complicate it. Once I saw the 42% revenue growth, I was expecting a significant uptick in the guidance, and this is exactly what happened. The company increases guidance from 1,500 crores to 1,800 crores. Even if you look at it from approximately 1,200 crores, that's a growth of let's say 40-45%, right? You see how the company that was growing at 20% is now growing at 40%. Now imagine what will happen to the valuations, right? You are once paying let's say 20 rupees for a 20% growth engine. You will be like, oh, you're growing at double the pace, I'll give you double the valuations because I want to be part of that growth. Even if you look at it, the company almost 400 ke levels per started picking it up, and either say the market re-rated it to almost 800, right? The stock basically doubled. Why? Because the order inflow ki pace doubled, your revenue growth doubled. Even if you look at it on a FY26 basis, the company increases sales by almost 45%, right? The company increases profit growth by 37%. This was mainly due to because a lot of copper inflation, labor code, वगैरह, a lot of these factors के वजह से profit growth was not as much as the revenue growth. But you can see 45% say company is growing when it used to grow at 20-25%. Company used to historically trade at almost like what, 30-40 times. Because of this new phase of growth, the company ka P ratio expanded from almost what, 30-40 times to almost now 84 times. See, pace of growth double ho gaya, pace of growth rate. That is why you always give importance to the pace of growth rate, not the actual numbers, right? People always look at the market share of companies. Market share देख के कुछ नहीं होगा bro. Unless you look at if the market share is improving, then and then only market share कुछ value है. अगर आप बस 30% market share लेके बैठे हो, आपको कोई ग्रो करने का एस्पिरेशन नहीं है, देन मैं क्यों पैसा डालूंगा? मैं एक ऐसी कंपनी पैसा डालूंगा जिसका 10% मार्केट शेयर है, बट वो बोल रहा है अगले 2 साल में हम 30% करेंगे. ऐसे कंपनीज में वैल्यू री रेटिंग दिखता है, राइट? नहीं तो फिर वो कंपनी बस देखते बैठे कि डिविडेंड ले लो, उसमें कोई वैल्यू है ही नहीं. And even if you look at it, the company's ROE that the company used to do like almost what, 22% ROE has increased to 24%. And I've always seen people that whenever stocks keep rising, they're like, भाई आप बहुत बढ़ गया है, I can't buy the stock. But the thing is, you need to reward the good stocks by buying it on the way up, right? You can't expect कि stock बहुत अच्छा है, income statement वगैरह कंपनी ग्रो कर रही है and कंपनी का stock ऐसा है. No, if a company की income statement ऐसी है, stock भी most probably ऐसा ही होगा. जैसे TDPS सिस्टम में thing is that I did not buy my entire position at 400. No, I added at 400. Then I saw कि every quarter company का performance is increasing. Then I kept on adding, even when it's on the way up, right? Because if a company is doing well, there's no reason for me to be like, no, I won't give you enough more money. I'll be like, take more of my money. Even if you see the kind of con call management is saying that the gas turbine and gas engine business is completely turbocharged and demand has increased dramatically, right? If this is the kind of response that I'm getting from the management कि demand is like super, भाई मतलब बहुत तगड़ा demand है, हमारे पास इतनी capacity नहीं है कि हम demand को cater करें, right? So there's a demand supply mismatch. This is what I look for in companies, and the company is also building up new capacity to cater to this demand. Capacity expansion is an indicator of one, demand. Even if you have good demand for your products, will you do capacity expansion, right? If you're like धंधा अच्छा नहीं चल रहा, you won't be like नई capacity बनाते हैं. If you're building new capacity, means there is good demand for your products, good outlook is good for the next couple of years, and also that is basically showing how much revenue I can do going forward, right? If I'm building, let's say 100 crores of capacity and I have an asset turn of 2 times, I can basically mean that 200 crores of revenue will get reflected in my income statement. As simple as that. So this is saying, like, you can just look at the type of commentary. This is why it's very imperative that you always look at con calls of the company, looking at screener, looking at all these news channels. It won't do shit for you. You always have to go deeper, look at the con call analysis, and ये actually deep dive करना पड़ता है. And company has given an outlook of $22 billion for FY27, which I expected very conservative. Company is saying that it will do approximately 30 billion to almost 3,000 crores to 3,200 crores by FY28. This is based on the incremental capacity that the company is adding. Based on the capacity that a company has, company can do approximately 650 crores of order inflow per quarter, right? Even if you look at the latest quarter, the company has been getting approximately 650 crores of orders every quarter. If we annualize it, we get approximately 2,500 crores of 2,600 crores of revenue. So I'm pretty sure that in Q1 of FY27, company will increase its order book company will increase its revenue guidance to approximately 2,500 to 2,600 crores. See, 650 crores, you multiply it by 4, you get approximately 2,600 crores. That is approximately revenue company can do in FY27. That was it for explaining my journey, right? Just to summarize it, what we saw first in Capital Goods company, we look at order book and order inflows. If the company has a very short execution period of the order book, we look at the order inflows. If it has a long period of like more than 1 year, then we look at the unexecuted order book. Next, we look at how we look at capacity expansion. Capacity expansion and order book, these are 2 direct indicators of the company's future outlook. If these 2 are going well, company will do well in the near term and medium term. This is what we learned, right? Now let's move on to analyzing the company Q4 results and the future outlook. So I just made a dashboard of this, which will be good to analyze. So the company is guiding to grow approximately 28-30% से company grow करेगी, which I'm pretty sure company will surpass this 2,400 crores, because even if you look at it, company did a revenue of approximately how much? 590 crores, almost 600. So company can easily achieve this 2,400. It will surpass it most likely. And even if you look at it, the company can grow by 36%, like beautiful numbers. With this, you can analyze कि company used to historically grow at approximately slow pace of growth say, but now pace of growth has picked up. Here you can look at you can read this later. You can pause it and look at it. What are the reasons for this growth? First is prime mover capacity doubling. Prime mover capacity doubling means basically what? मतलब कंपनी के जो की कस्टमर्स है, राइट? कंपनीज लाइक सीमेंस, कंपनीज लाइक जनरल इलेक्ट्रिक, all of these companies, these are basically doubling the capacity. As we saw in the con call, end customers like INEO that is working with VoltaGrid, that is they are tripling capacity, right? अगर ये capacity triple कर रहा है, इसका revenue triple होगा, so TDPS इसको जो supply कर रहा है वो भी triple होगा. As it mentioned, prime mover capacity like your engine, turbine OEMs are actively doubling capacity by 2030. So TDPS का revenue whatever supplying, that will also double. You can just look at this. Then the future growth and KPIs. As we mentioned, the company is doing like 650 crores of order inflows, and management is guiding by FY27 we can move it to almost 800 crores of revenue. You can just read it right here. This is the vertical growth and realization map, like the different segments of the business, how are they doing. Like the gas engine, this is the high volume, the steam turbine, the hydro, and the large generators. Right, now the next leg of growth that is coming in this company is coming from the large generators business up to 200 megawatts, right? This is very similar to the kind of growth that is happening in transformer companies. We are seeing transformer companies, they are moving up to 765 kV HVDC orders because they are higher margin in nature. Similar to this, if you compare a 45 megawatt to a 200 megawatt, 200 megawatt में what, there will be more specialization, design ज़्यादा लगेगा, higher quality material लगेगा, so company can of course charge a more premium और ज़्यादा margin charge कर सकता है. So this is another growth that the company is doing, because I think the data center growth that has largely or marginally been factored in by the market. Even if you look at the valuations, 80 times per company is not cheap at all. But we'll do a forward valuation of this, because these companies, right, you can't look at these high growth companies on a TTM basis, trading 12 basis पे नहीं दे सकता है, because the market is always forward looking. The market doesn't care कि तुम past में कितना grow किए हो. Market only cares कि future में जाके how much are you growing, right? If you, let's say you grew at 20%, market doesn't care if you're growing at 20%. Market cares that going forward you're going to grow at 40-50% plus. That is why we value these companies on a forward P basis, which we'll do right now as well. So this is one thing you have to keep in mind, that you can't look at, like, let's say you're driving a car, right? If you're driving a car, you'll always look at you'll always look piche. You'll always look in the front mirror. You won't look at the rear view mirror. Same thing with valuations. Valuations are always forward looking. The market cares ki aage jaake how are you growing? According to that, I'll value today in the future. It's also called as the market discounting or factoring in the growth, multiple names. So if you look at the valuations, the company is guiding to grow approximately 30% plus say, and if we assume a 30% plus, we get 2,400 crores of revenue. We get a PAT of 325 crores, assuming a stable PAT margin. So how we do this is the forward P equals market capitalization divided by the estimated PAT for FY27. So FY27 में company can do approximately 2,400 crores of revenue, 13.5% PAT margin, and 325 crores of PAT. If I divide the current market cap, approximately 19,000, by 325, we get 55 times earnings. Right now, you will think 55 times is still expensive. It is expensive in a way, but if you look at the growth rate, right, company is a 30% growth engine that is guiding to grow at 55%, which is approximately 1.25 times or 1.5 times PEG ratio. When you look at this in hindsight, you'll see that the company is not that expensive as it seems. When you see an 80 times earnings, you'll be like, "Arey bhai, bahut expensive company." When you look at forward basis where company is a 55 times earnings, 1.5 times PEG ratio, you'll be like, okay, considerable. If company can grow at an even faster pace, then these valuations become very understandable. Revenue potential of approximately 3,200 to 3,400 crores in FY28 by the new capacity that the company is adding. वो ऐड करके कंपनी कैन डू अपना 3,200 करोड़. अगर उसको कंसिडर करें एंड पैट मार्जिन 13.5%, स्टेबल मार्जिन्स, कंपनी कैन डू अ पैट ऑफ 450 करोड़, विच गिव्स अस अ 40 times earnings. बट आई पर्सनली डोंट लाइक टू look at valuations from above beyond 1 year, because I don't know in that 1 year if the demand outlook will change, if the management will change, if the business performance will change, right? So 2-3 साल का आगे का revenue guidance देख के I personally don't like, but if you guys want, you can look at it. Just to summarize it, what we saw how TDPS evolved, right? It was a 20% growth engine that expanded to almost 40-45% plus. Why? Because data center Capex. How did I identify it was a proxy to data centers? By analyzing the con calls, by analyzing that what the big companies in US are doing. They are building captive power plants. So TDPS is a proxy to a proxy. Then we looked at why order book versus order inflows. Why TDPS के case में we look at order inflows, because it has a very short execution cycle of the order book. That is why we look at the order inflows. Next we look at the capacity expansion. We also looked at future में company क्या कर रही है, right? So if you look at it currently for an investor, I think you should definitely hold it. But current levels पे entry करना, that is a bit tricky, because when you enter a stock, you have to look at the starting valuations, right? When I entered the stock, the company was trading approximately 30-40 times पे. 30-40 times से जब company ये हुई 80 times पे गई, तभी मेरा पैसा basically double हो गया, because valuation doubled, I get double the money. So if you're currently looking to enter right now, I think it would be a bit more expensive. If you want to start, you can start with a low allocation, maybe 1% of your stock, 1% of your portfolio maybe you can allocate to the stock. If you know, due to the Iran-US war, if there's a bit of downfall in the market, maybe you can invest in that. But the thing is, you always have to look at valuations from a subjective point of view, right? I can't tell that 55 times is cheap or 55 times is expensive. If you are a high growth investor, you'll be like 55% growth, 50% earnings, 55 times earnings is not that expensive. Again, I'm not a registered analyst. This is not a buy or sell recommendation. This is simply I'm sharing my research or my analysis with you. The decision is yours. With that, we'll move to the end of the video. I hope you guys liked the video, found it informative. You guys know how to analyze capital goods company, what are the metrics you look at capital goods company, and also, yeah, that's it. So I'll see you guys in the next one. Thank you so much.